Welcome to the January 2026 edition of the GECF Monthly Gas Market Report. We would like to present a short overview of the main highlights of the report, which include the major developments in the gas market during the last month. As of January 2026, global GDP growth for 2025 was estimated at 3.4% by Oxford Economics, based on purchasing power parity. This outlook underscores the continued resilience of the global economy, which has maintained steady growth despite ongoing geopolitical tensions and trade-related uncertainties. Looking ahead to 2026, global economic activity is expected to slow, with GDP growth forecast at 3.2%. At a country level, US GDP growth for 2025 was estimated at 2.2%. Growth is expected to strengthen in 2026, with the forecast revised up to 2.8%, supported by robust consumer spending and rising business investment, particularly in AI-related sectors. In the EU, GDP growth for 2025 was estimated at 1.6%. Growth is expected to moderate in 2026 to 1.2%, reflecting softer investment conditions. China's GDP growth for 2025 was estimated at 4.8%. Growth is expected to be eased slightly in 2026, with GDP projected to expand by 4.5%, supported by continued government stimulus and external demand. Meanwhile, India's GDP growth for 2025 was estimated at 7.6%, with the outlook for 2026 maintained at 6.5%. In the first 11 months of 2025, aggregated gas consumption in some of the major gas-consuming countries, which account for 75% of global gas demand, increased by 1.4% year-on-year to reach 3,210 BCM. Growth was recorded in EU, North America, and Asia. EU natural gas consumption slightly increased by 0.3% year-on-year in December 2025, reaching 40 BCM. The rise was driven primarily by higher residential heating needs and increased gas-fired power generation. Average temperatures across Europe were 0.6 degrees Celsius lower than a year earlier, with particularly colder weather in southeastern Europe, the Western Balkans and southern Poland. Several areas even experienced early-season snowfall, further boosting heating demand. EU electricity generation saw a slight year-on-year increase to reach 227 terawatt-hours. Notably, gas-fired power surged by 5% year-on-year, reflecting gas' continued importance in balancing the grid, particularly during the recent cold spell. In November 2025, China's apparent gas demand, which includes gas production imports, recorded a growth of 7.8% year-on-year to 38.4 BCM. In the first 11 months of 2025, China's gas demand rose by 1.5% year-on-year. China's electricity generation reached 840 terawatt-hours in November, a rise of 6% year-on-year. In December 2025, US natural gas demand rose by 6.8% year-on-year, reaching 100 BCM, driven mainly by a sharp increase in heating-related consumption. Residential and commercial gas use expanded significantly, up 16% and 13% year-on-year, respectively, as cooler-than-average temperatures intensified space heating needs, particularly in northern regions. Industrial demand edged higher by 0.7%, while gas-fired power generation increased modestly by 1.5% year-on-year. In November 2025, global gas production rose by an estimated 2.5% year-on-year to reach 360 BCM. All major gas-producing regions except for Eurasia and Europe recorded positive growth, led by North America, particularly the US. European gas production recorded a 1.3% year-on-year decline in gas production to reach 16 BCM. This is the 10th month to record a year-on-year decrease in European gas output in 2025, mainly driven by lower gas production in UK and the Netherlands. In November 2025, China's gas production maintained its growing trend to reach 21.9 BCM, representing a 5.9% year-on-year increase. For the period January to November 2025, cumulative gas production in China stood at 239 BCM, reflecting a 6.3% year-on-year rise. Meanwhile, in December 2025, US total gas production continued its growth trend, to record a rise of 3.7% year-on-year, to stand at 96 BCM. This increase was supported by the increased Henry Hub prices, which improved market dynamics, in addition to the rising domestic gas demand and growing LNG exports. In December 2025, the EU countries imported 12 BCM of PNG, which was just 0.5% lower month-on-month, but 12% lower compared to 1 year ago. Moreover, cumulative EU PNG imports over the course of 2025 decreased by 10% year-on-year. In 2025, 23% of the total PNG imports entered the region via Germany, while net gas flows from the UK to mainland Europe increased by 14% compared to the previous year. November 2025 marked the 19th consecutive month of year-on-year increases in PNG imports in China. The country imported 6.8 BCM of PNG, which was 25% higher month-on-month, with total PNG imports in 2025 thus far increasing by 8% to reach 74 BCM. In December 2025, global LNG trade reached new highs, with imports hitting a record 41.9 million tons, surpassing the 40 million tons threshold for the first time, and rising 10% year-on-year. Europe led the growth as LNG compensated for declining pipeline gas imports, while Asia-Pacific also strengthened amid softer prices and cargo diversions from China. Europe remained the preferred destination for US LNG exports, supported by the narrow spot price spread with Asia. On the supply side, global LNG exports set a monthly record of 40.5 million tons, growing by 8.3% year-on-year, driven primarily by Angola, Canada, Mauritania, Nigeria, Senegal, and the United States. In December 2025, the monthly average level of underground gas storage in the EU decreased to 72 BCM, driven by colder than average temperatures during the second half of the month. This represented 69% of the region's capacity but remained 10 BCM less than the 5-year average for that month. In Asia, warmer than average temperatures pushed the combined LNG stocks in Japan and South Korea to estimated at 15 BCM, 3 BCM more than the 5-year average. In the US, the monthly average storage level fell to 100 BCM or 75% of capacity. Total net gas withdrawals during this winter season thus far reached 16 BCM. In December 2025, European TTF spot gas price averaged $9.48 per million British thermal units, declining by 8% month-on-month and 31% year-on-year, with the daily price touching a 19-month low of $9.14 per million British thermal units. In Asia, the Northeast Asia spot LNG price averaged $9.89 per million British thermal units, down 11% month-on-month and 30% year-on-year. In contrast, US gas prices continued their upward trajectory, with Henry Hub averaging $4.18 per million British thermal units, reflecting increases of 8% month-on-month and 39% year-on-year. Looking ahead, spot prices could find support and firm modestly if colder weather materializes and seasonal heating demand strengthens across key consuming regions. Thank you for watching this short video presentation on the January 2026 edition of the GECF Monthly Gas Market Report. We invite you to download the full report from our website at www.gecf.org, or you can scan the QR code.